Hello everyone, where we help you live your best life with smart decisions and practical tips. If you're new, don't forget to subscribe and ring the bell so you never miss our weekly content. Today, we're diving into a topic that affects us all, taking control of your money. Whether you're struggling to save, dealing with debt, or want your money to work harder, this video is for you. Managing your finances is a skill anyone can learn. It starts with small, intentional steps to improve your financial situation. We'll cover 5 crucial steps to set you on the path to financial freedom. Let's get started. To take control of your money, you first need to understand your financial situation. You can't move forward until you know exactly where you stand financially. Take an honest look at your income, expenses, debts, and savings. Start by listing all your sources of income. This includes your salary, side hustles, freelance gigs, or passive income streams like rental properties or investments. It's essential to know how much money comes in each month and where it's coming from. Next, you'll want to track all of your monthly expenses. Be sure to list every expense, whether it's fixed or variable. Fixed expenses are those that stay the same each month, like your rent, mortgage, utilities, and insurance premiums. Variable expenses are different because they can change each month. Groceries, entertainment, dining out, and gas are all examples of these. Keeping a detailed list helps you see where your money goes and spot areas where you might overspend. After gathering your income and expenses, the next step is to calculate your net worth. Subtract what you owe, your liabilities, from what you own, your assets. List your assets, like savings, investments, property, and other valuables such as your car or jewelry. Next, list your liabilities, credit card debt, loans, mortgages, or student debt. Subtract your liabilities from your assets to find your net worth. If your liabilities are higher, don't worry. This is just your starting point and you can improve it over time. Now that you have a clear picture of your finances, you can start making informed decisions about where to focus, reducing expenses, cutting spending, or paying down debt. Knowing your starting point helps you plan for the future. Now that you know where you stand, the next step is to create a budget. A budget is a financial plan that helps you focus your money on your priorities and avoid unnecessary spending. It acts as a blueprint guiding how you manage your money each month. To start, set clear financial goals. These might be short-term, like building an emergency fund or paying off credit card debt, or long-term, like saving for retirement or buying a house. Once you have goals, allocate your income based on what matters most. The 50-30-20 rule is a popular way to budget your money. You put 50% of your income toward needs, like rent, utilities, and groceries, 30% to wants, such as entertainment, dining out, or shopping, and 20% to savings or paying off debt. The next step is to track and monitor your spending. You can do this by writing everything down or by using budgeting apps like Mint, Winamp, or a simple spreadsheet. These tools help you stay on top of your finances by categorizing spending and giving you a helpful overview of your budget. As you go along, adjust your budget as needed. Your financial situation will change, so update your budget to stay on track with your goals. Consistency is key to successful budgeting. Adjusting to a budget takes time, but the financial freedom it brings is worth the effort. One of the best ways to take control of your money is by building an emergency fund. Life is unpredictable, and an emergency fund gives you a financial safety net to help avoid debt when unexpected expenses come up. An emergency fund should cover 3 to 6 months of living expenses. Even small contributions add up over time. Set a monthly savings goal and contribute regularly to your emergency fund. Even $50 or $100 a month makes a difference if you're consistent. Over time, you'll gain peace of mind, knowing you're prepared for the unexpected. The best place for your emergency fund is a high-yield savings account. These accounts offer higher interest rates than regular savings, so your emergency fund grows while staying accessible. Automate your savings to stay consistent. Set up automatic transfers from checking to your emergency fund each month so you don't have to think about it. Once you've built your emergency fund, you'll have a buffer to fall back on if life throws you a curveball, whether it's an unexpected medical bill, a car repair, or a job loss. This financial cushion gives you peace of mind and lets you focus on your long-term goals without the constant worry of unexpected expenses. Debt can be a major obstacle to financial freedom. But the good news is that with a strategic approach, you can pay it off and take back control of your finances. The key to managing debt is to have a plan and stay disciplined. Let's start by listing all your debts. Write down the outstanding balance, interest rate, and minimum payment for each one. This gives you a clear overview of what you owe and where your money is going. Once you have listed all your debts, you can pick a strategy to pay them off. Two popular methods are the debt snowball and the debt avalanche. The debt snowball method means paying off your smallest debts first. Make minimum payments on all debts, but put any extra money toward the smallest balance. When that's paid off, move to the next smallest debt, repeating the process. This method gives you quick wins and builds momentum, making it really motivating. The debt avalanche method means paying off debts with the highest interest rates first. This saves you more money over time, since you're tackling the debts that cost you the most in interest. The downside? It might take longer to pay off your first debt, which can feel discouraging, but in the end, it's the most cost-effective way to pay off debt. Another way to reduce debt is to consider consolidating or refinancing your loans. If you have several high-interest debts, combining them into one loan with a lower interest rate can help you save money. Refinancing your loans for a better interest rate can help you pay less over time. While paying off debt, avoid taking on new debt. Stay disciplined by living within your means and sticking to your budget. Managing debt takes time, but the relief of being debt-free is worth it. After you've budgeted, built an emergency fund, and paid off debt, it's time to look ahead. Investing is one of the most powerful ways to grow your wealth and secure your future. Investing can seem intimidating at first, but anyone can start with the right mindset and approach. The first step is understanding your options. There are many investment vehicles to consider, like stocks, bonds, mutual funds, ETFs, exchange-traded funds, and real estate. Each investment option has its own level of risk and return, so it's important to do your research and choose investments that fit your financial goals and risk tolerance. One of the most important principles in investing is compound interest. The earlier you start, the more time your money has to grow. Compound interest means the money you earn from investments earns even more. Over time, this can lead to exponential growth. Diversification is a key investing principle. Don't put all your eggs in one basket. Spread your investments across stocks, bonds, real estate, and more. Diversifying helps protect your money if one investment performs poorly. Investing requires ongoing education. Read books, take online courses, and consult financial advisors to keep learning investing strategies. Small, consistent investments can grow into significant wealth over time. Taking control of your money is a journey, not a sprint. It takes patience, discipline, and smart financial decisions. Assess your situation, create a budget, build an emergency fund, and manage debt. Invest for the future, and you'll set yourself up for long-term financial success. If these tips helped, give this video a thumbs up and share it with someone who'd benefit. Got questions or tips? Drop them in the comments. I love hearing from you. Remember, financial freedom is within reach. Take that first step. See you soon.